All right. So what we do know as far as like moving the market around, so we know FOMC minutes a day. So so first off, FOMC member is speaking could move the market around. Typically, the market just goes choppy at those parts. Like I'm not going to lie, it's hard to trade at those moments. Most of the time. FOMC minutes, I know it lays a lot of weight, but FOMC minutes is nothing more than a repeated version of the last FOMC statement. Like if you never know what these events are, you could actually just click them. And right here, schedule 8 times per year, and then it's basically just a detailed record of the FOMC's most recent meeting, which was just a week or two ago. So as long as nothing is new is said, then it should be like the information should already be priced in. Basically, is what I'm saying, unless something new comes in. But that being said, it is. I'm definitely not going to be trading through it, regardless. But I don't think it should stray you away from trading this morning. But be aware that things may or may not move based off it. And the reason I say may or may not move is simply because sometimes it moves all crazy heading into it, and people are like, oh, it moved in all before, and sometimes it just chops around and it moves afterwards. I don't like. There's no way to tell, in my opinion. And so just be aware it's there. What I do know, so crude oil inventories is I will certainly be possibly looking at oil, the place to trade there if the indexes are not moving around, because that will certainly cause volatility and we look to place a trade there. Just be aware also, oil just did a contract roll. So it is now CLV5 or CLV25, whatever, would depend what you're trading it on. Um, as far as the contract that you should be trading. Good morning, Mirza. All right, so now let's get our game plan. Let's go ahead and look at a bigger picture here. This is, sure, we'll start on the NQ. It's 15. Let's go to, I'll go to the hour daily real quick. So we came back down. We're at here's the 21 EMA. We came down to point of control. You can see how we dipped down below it and now we're coming right back above it. And this is point of control from this consolidation period from this point over. So what exactly does that mean? Well, you can see, I'm actually going to do this rectangle. This little node defended it. And we're here at point of control. If it does bounce up, it then steps back up right there. Actually narrow this down a little bit. Point of control. What I'm doing is widening this out to see potentially where it may rally if it does. Right there makes sense. Horizontal line. Wham, right there. Make these global. So what I'm doing right now is I'm looking at the volume profile right here. And then I am looking at the nodes right here. So there was this node right here. I drew it across. That's where price is bouncing. Point of control is right here. So there's no reason to draw it. And next is you can see this little node right here. And this little node is I'll call it a high volume node, but it's the first little peak before this big one. Usually, like something I learned from Neil was it's like these little peaks kind of defend areas. So, and it could be a zone. I could draw a little bit bigger, but I'm just going to put a line there without clouding the chart. Is you can see how that little node was support, right? And then resistance, so on and so forth. So basically, if we are going to rally up into it, just areas to look at where resistance may be. Now, if I come, there's one more line I want to throw up here. And so here is the peak of this node right there. But then maybe if I do this, might be a little bit easier. And I'll draw it across. Global, global, and then this one I'm actually going to change the color just simply because it's the peak. And since it is the peak, let's make it, I guess we'll make it purple. Just something to be aware of. Something that changes the color. So if we do rally up to here, from an hourly perspective, like what could happen if we're looking at it from a price action perspective? All right, price came down to this node here. We have reclaimed view up, and we're kind of coming up here to the hourly 21, and we may come back down, maybe make a higher low, and maybe come back here. But at the moment, what we do know is that this potentially may be the high, this may be the low for the moment. And then the question is, from these areas, where can we make our profit? Now, if it does come up here and break above here, then we could just look to trade it up even higher, and then we could always come back and readjust to see what we got to do there. That's the NQ, but I just want to wait and see what happens after it opens and pushes up. And but yeah, so there's that. Put this back on the 15. There is a 15-minute high compression squeeze building. Let's go to the ES. Go to the hourly here on the ES2. Zoom back. All right. So what we can do is you see price rallied up. It's hitting this little resistance level. So what we can do here, draw a little line. This one will be peak because it's just a peak, not a node. And then if price was to come lower, and see that's right where it bounced. Okay, come here, mouse. Come back. So you see that's right where we kissed. See if we'll come back down to it. If it starts to bounce around on this, we can narrow it down even more. But you see that's kind of like where we're coming down. We're coming up into this resistance level. See what happens when we get here. And if we do go lower, there's going to be this little zone here. If we do rally, we got those. Okay, so we have our upper and lower limits there. One other thing I want to look at is just get oil ready. Simply because if the market is going to, or sorry, if oil is going to in fact move higher, then or lower, I just want to be prepared because they have oil inventories. Basically, is what I'm trying to say. Let's see, and I do know the market's open, but don't need to go chasing waterfalls just yet. So from an hourly perspective, let's actually look at the daily real fast. Because I know we had the contract roll, gap down. So we're kind of sitting here on daily support. Let's narrow it down hourly. It's on daily support with everything trending lower. But it's on daily support. From a weekly perspective, or sorry, hourly perspective, build a squeeze, back up of moving averages. I mean, you know, let's just take a step back and see if there's like a pretty strong base building here. Yeah. Well, actually just gonna have to play it like this. So if price does rally, we're gonna have resistance right there. Resistance right here. And that may not seem like much, but remember, oil for every, okay, say if you have one contract, for every 1 cent move is $10. So actually, it's quite a bit. So for every $1 move is $1,000. All right, so let's go see what the indexes are doing here. 15 minutes. Let's reset the ES here. Spiked up into resistance, failing. I do like this 15-minute smackdown right here, but I'm gonna wait. I'm not gonna go trading it right out of the open. I've been doing a lot better lately, just letting the market get me in. So that's something I'm probably going to focus on more, is letting the market put me into position. And if we look at Bookmap here on the ES, what the NQ look like? Hold on. Strong little base right there that just caused a surge. All right, let's check out the ES. Let's see if it's going to bounce or not. But this mortar's on 64.10, which lines up with this level here. There it is. Anchor VWAP. Let's put it on the open. $15-minute high compression squeeze building. Definitely in a range. 625, 21. If it does fail here, I might take a quick short down, looking for this 15-minute breakdown to continue. So I am going to wait. I am looking to potentially getting a short here in a second on the ES. Just waiting a minute. There's this 15-minute bear flag situation kind of building. So if it is going to break down and continue, they're going to put a stop sell order at 2050. I'll let the market get me in. So if a market flushes down to 2050, it'll get me short. Then I'm simply going to put my stop up here at, we'll call it, give it a little bit of, let it breathe a little. One of these highs? No, if it shouldn't spike up above here. So I'll go to 26, 25. So I'm not in position, just put a stop order. Get my pin. So at 2025 is be my short order. And I'll put my stop right here. If you want my free course on how exactly I get funded in 1 to 3 days, then click the link in the description. Inside, I'll walk you through everything that's actually worked for me, plus any of the unspoken concepts and some of the biggest myths around day trading futures that no one is talking about. Now, if it does feel catch a good flush, so we could take off some right here at the low at 17. I'm going to close one at, let's see, 17-ish. All right, just got filled. But I think it's going to have more to it. In fact, let's look at Bookmap. Where should we take some profits? Man, is that just enough to fill me? Because like I said, I'm gonna put my stop up here at 26.25. Let me get that order out there real fast. But yeah, the market's early. It's early in the day. We don't have to really push it too hard. But yeah, I'll cover one at 18. That's only 2 points though. Let's at least try to grab at least five. See, we're risking 20 and put boom. Let's try to get five. See, orders at 15. There's nothing at 15 yet. So like I'm looking at this. So I need until like 10. But we could close it a little bit before 15, at least grab 5 points. So I will scale out at 15. And then after that, I'll move my stop loss to break even if we get it. I do not consider a spot gamma levels. Feel like I'm already juggling enough as it is. And then if it does flush down, I think I'm going to close it at 10. There's just a lot of orders right here. So 15 and 10 will be the two spots I'm going to close this trade. So put it there. All right. So what I have here, and we'll erase these. But I got an order here at 15. One down there here at 10. And I have a stop up here. And we got short on the break of 20, 25, bam. So we're targeting these right here. Right there. Let's go to those. So now we wait. We did come back down and test this wick right here. So see if we can continue forth lower. We do have the 2-minute squeeze going negative still, so everything's looking fine. Almost to 15. Come on. So close. Am I being a D for a T? I always ask myself that as something's moving in my direction and it pauses. Am I being a D for a T? Get ready to move stop loss to break even. Oh, almost made it to 15. Let's see here. Where's the low of that wick here? Ooh, so close. It's all right. Nothing's wrong with with the setup yet. I just prefer to lock up at least half, but I'm gonna wait a minute. If it does rally up and just retest the AEMA, not a big deal. Everything's looking good. Tom liked the long there. Maybe you got it there. Which let's see here. Well, maybe Tom's on the right side. Well, coffee trying to choke me out. Let's see. Got this is if it stops us out, this is gonna be a prime example of D for a T. But all we're doing is testing the New York session anchored VWAP. So we'll give it a minute. And there's also some down here at 604. But the setup is still valid. There's still nothing wrong. If we look over here on the 15-minute chart, this is showing a pretty solid bear flag and some large orders down below. Cumulative volume delta is negative. Pretty solid rejection at that VWAP. Both VWAPs are there. All right, so there's our first fill. Move in, stop loss to break even. So we have some 210 or a lot here at 210. So order was filled for the first target. Stop loss is now at break even. So now it's a risk-free trade. I like us to see come down to 210. There's obviously more down here at 602, as you can see down here as well. But I'm okay with just taking the high probability liquidity target. If you have more than two, then by all means hold for more. But I'm looking just for 210 because there are these down here. Yeah, we may bounce beforehand because we are getting extended down to the third ATR on the 2-minute. Squeeze is just now firing, but we're getting some big bubbles coming in. Let's see if it's come down and kiss the 210 level. We're close. Sometimes it won't always get right to it. Let's see. 212. Let's just see what happens. Stops at break even. We have all day. Target's about to be hit. Ooh, this right here is forming a reversal signal here. I'll wait for it. The volatility move could cause just a little bit of a whiplash there. Let's wait. We caught the majority of this move. If I have to adjust, I'm okay with closing a few points ahead of 64.10. I've been calling it 210 this whole time. That's kind of funny. I mean 64.10 because we got down to 64.75. 64.1075. We're close. Oh, that flush just got us filled. Okay. And now we're done for the day. That's it. All right, cool. Not bad for a FOMC minute day. I'll take it. That was about a $1,000 day. What does a D for a T mean? Oh, really? Yeah, by all means, I can tell you. It means dick for a tick. Um, JC says it, John Carter says it quite often. But what does the phrase actually mean? Well, so the actual phrase, what it means is like, sure, you may want to get, like, if we use our example of, we're targeting 6410. Let's say price came down to 6410.25 or 0.50, right? And it just stalled there for a minute, bouncing around, but it just wouldn't quite get us our fill. So instead of being a little stickler for that one that one tick to get your target, why not close it a few ticks early and then, hey, at least you're still profitable before it reverses on you? Is what D for a T means. So D for a T is dick for a tick. Got it. Yeah. Yep. But that was a pretty solid trade. Not bad for FOMC minute day. I'll take it. So let me get my trading view up. See 775 there. I did this in two accounts. So like I'm doing this thing where I want to show you could take small accounts, or you take your small $1,000 account, right, and flip it to quite a bit. So that was $1,400. I'm not going to push it today. I've been wanting to push it for $1,000 bucks a day, but seven or like in each account, but 1,400 solid. I'll leave it alone. FOMC minutes today, just take it. But let's do a quick trade recap.